this afternoon, government would borrow about 180 billion cedis via Treasury bills this year. That's according to Data Bank research. Now, this would be 21% more than what it raised in 2023. Here's more in this report.
Government is expected to raise more than 50% of the 61.9 billion cedis budget deficit through Treasury bills. This is along with estimated maturities of about 150 billion cedis, a growth of 28% over that of last year. Indeed, Treasury bills are said to remain the dominant driver of activity on the Ghana fixed income market. Analysts believe domestic investors could remain skewed towards shorter-dated Government of Ghana securities to manage risk exposure, blurring the hope for any bond issuance. Yields are expected to decline on a positive inflation outlook, but upside pressures will persist from the government's high demand for money market funding. Data Bank research believes the momentum of yield decline will continue to face headwinds as the T-bills forecast of 180 billion cedis is substantial to keep upside pressures elevated.
All right, so let's make sense out of this. And joining us via Zoom to do that is Associate Professor of at Andrews University, William Supra. Thanks so much, sir, for your time here on the marketplace. Initially, what are your thoughts about government's appetite for borrowing from the capital market this year alone? It is expected to borrow about 180 billion cedis via T-bills.
Good afternoon to you and your viewers. So if you ask me, government appetite in borrowing from the money market, which is a treasury bill in a short, that is borrowing within 1 year period. We know that government of Ghana is shut out of the international market. Government cannot borrow more than 1 year. The avenues are blocked. So these avenues that were available to Ghana, one was the bond market, which we know the challenges of the bond market. The bond market had two options, the domestic bond and then also the external bond market, the Euro bond. So this market has been shut to Ghana. So the other avenue that is available to the government is to borrow domestically, but from the money market, which is within a period of 1 year. Also, we know that the central bank, based on the IMF agreement, can no more monetize or finance government operations through printing of money. So government is in a very tight corner now, and this is the only available means for government to raise revenue. The other option is through taxation. So these are the forms where government can raise revenue. The third, the fifth one maybe would be if government sells some of the existing assets to raise revenue. But we know that it will take a very long time for an asset of Ghana government to be sold. So in a short period, the treasury market or the money market is the available revenue sources aside taxation. And that is why we've seen that this has been the only approach that government is adopting. It was stated in the budget. That is my concern for now. The rate of borrowing, we may have to find a strategy to go about it.
And there's been this concern about the fact that why government isn't being innovative when it comes to revenue mobilization, for which reason there wouldn't be the need for government, I should say, to go to the money market to borrow.
I mean, so if you understand how government raised the revenue, they were the options that I've mentioned. We have assets. Some of the assets are commodities that we have, or maybe a business that the government can sell. At the moment, the only one on the table is Airtel to go, but we know that the performance of Airtel to go, there's no value in it, so government will not be able to raise revenue. The other option is probably if the assets in terms of commodities that we have, oil, gold, diamond, are natural resources. That is one other area. So because of these challenges, that is why government is opting for the treasury market. Let me so in finance, so the major problem of our country is the exchange rate situation. So if you're able to address the exchange rate situation, things will go on very well. One trick in being able to do this, there's something we call carry trade. Carry trade is that when someone sees that there is a disparity between two countries' interest rates. So we know that to be able to solve your exchange rate, that is when a country's currency is devaluing, the norm is that your interest rate will go high. And this will attract foreign investors to come into your country to invest. And then when they change their money back into their currency, they make some profit. So seeing that the Treasury bill rate is hovering around that 28, 29%, it's enticed foreign investors to come and buy government Treasury bill. And so that is another way of attracting foreign investors, because we have been shut off of the Eurobond market. So you may see that our Treasury bill market is increasing. We may have to really look at the mix. How much of it is made up of money raised domestically and how much of it is coming because of external investors? These are the other figures probably the central bank may have to give to us. And this may point to what I'm talking about of the carry trade. Because our interest rate, there's this kind of interest rate disparity between Ghana and other countries. Foreign investors will want to invest in Ghana short-term securities, and probably that is why we've seen that it is increasing. In another breath, it's going to cause an increase in our interest payments anyway, but because we don't have any other sources to support our fundraising, this is where we have to be. And in fact, if we're able to manage our foreign exchange very well, carry trade ensures equilibrium. So we'll get to a point that this situation will be normalized, but it will take a very long time. It doesn't happen just within a year. If this is approach that I know that the central bank is doing, because that is why they kept the monetary policy rate at that high level as compared to the rate of inflation dropping. So they just want to attract foreign investors by using this carry trade approach.
Professor Williams-Frimpong, we are indeed grateful for your time this very moment, for speaking to us here on the marketplace.